Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. Okay, so before we hop into the charts, I just want to go over something real quick. In case you want to join my services after the free trial of the swing trade service this month, I just want to go over something that has changed. Okay, so the pricing's the same and essentially the services are the same, but I have organized it a little differently. So if you're going to go through the Patreon, it's virtually the same. Okay, so you would come towards in the Discord, the Patreon link tab. You would click on this link here for the Patreon, and it would bring you to this page that you're seeing now. So essentially you have a choice of the three services: the swing trade service, the day trading service, or the tutoring service. And the tutoring service you're paying for the month, so you get 4 sessions within a month. So you're paying for $100 per session, but you're getting 1 session for free. That's why it's $300 a month. And in case you don't want to pay via Patreon, you don't want to pay with fiat, you want to pay with crypto, well, I've added that to the service as an alternative now to get into the services. So essentially this link here in the Patreon link tab, same place as the Patreon, you would click this link here and it will bring you to the page where you can actually pay with crypto. So you can actually pay with Bitcoin if you prefer that. And just like the Patreon, same pricing. However, I am able to break it up a little bit more, unlike Patreon, which doesn't let me do this. You can do $15 a month for the swing trading service, or you can pay for the year and pay $165, and you're actually getting 1 month free. So I made it where you're paying $165 for a year, the year-round service of the swing trading service, and you're paying for 11 months, getting 1 month free. And if you want to do the tutoring service, well, you can do it where you pay for the month just like the Patreon, or you could do it per session, $100 per session, if that's what you prefer to do. Okay, so I try to make this as simple as possible and give you as many alternatives as I can thus far. I'll try to improve it over time. And if you have any other questions, make sure to let me know. Any other pieces of advice to make it better, let me know. And of course, if you are interested in the swing trade service, do not join yet. Wait until the free trial for the swing trade service ends this month, so at the end of November, and make sure that it's something you like. Okay. All right. So let's hop into the charts now. I've shilled enough for you. So looking at the dollar. So today has been a pretty great day, at least, for me. I've been able to accumulate, really nice high value assets at cheap prices. The markets are giving me another shot to get into positions that I was trying to get into, last month at a good price. I'm getting in now at a better price, and in some cases I'm even able to add on to, I think, really good assets at really good positions to make them even better positions. So I'm actually not too upset about the dollar rising, but in my opinion, I do not see this rise to be extended far longer, far too far into the past. And I'm jumbling my words, but essentially I do think we're nearing the end of this rise. Okay, so a lot of this rise was fueled by what happened with the FOMC yesterday, and we also, on a technical level, hit this bottom part of this bullish structure here and have rallied since. And I do think that as we come towards the top side of this structure, which is bullish, we do have to highlight this is a bullish structure potentially, then we need to understand that it's likely going to fail here, mainly because of how immature the price action is. Okay, we haven't had much time to fill out this structure, and usually a structure of this size on the higher time frames takes more time to fill out. So what I'm seeing is likely the dollar will get towards the zone. It may even start peeking through and then come back down and eventually make it back down towards this ascending trend line it's been battling for past couple months. And because this trend line is so steep, the probabilities are there that it will likely break. Okay, it's not a long-term trend line. It's most likely going to break at some point, and when it breaks, we can already see the path that the dollar will likely take. It will likely come back all the way down towards the bottom side of this bullish consolidation, this bullish structure in front of us. Okay, so I believe even now that we are likely going to see a bullish November, or at least most, the latter half of November, and then a bullish December because of this. However, if I'm wrong and the dollar does break this level, and it can happen, this might be immature, but it does happen where price action will break structures prematurely. Then we need to look for the next levels where the dollar's going to go. Well, first it will take out the liquidity that's pulled above here and above here. Sorry if you can hear my dog barking. Sorry about that. And then the next levels it will probably take out, or at least head towards, is 118 to 119. So this zone here, finding probably some resistance there, potentially a pullback or consolidation to then make it towards 121. All right, I don't see this happening right now. I don't see this being the path. Okay, at least not right now. But we have to map it out in case it is. All right, we have to be ready for whatever scenario that might come our way. Either way, we're going to be ready, because if the dollar should break through, this is why we've kept money on the side. This is why we start positions small, so then we can strategically add on to them as prices go against us and start hitting levels that we've already targeted and mapped out to add on to those positions. This is why, in my opinion, focusing on surviving the markets will bring you wealth rather than focusing trying to make money. Okay, that's just my opinion. And of course, if you want more details onto that, ask me questions in Discord, and I go heavy into that stuff in the tutoring services, by the way, as well. All right, so now let's hop into the Dow. So looking at the Dow, pretty much doing exactly as we've mapped out. Really respecting this descending trend line. Price came up into it hard and then has fallen off of it. And so far, as you can already see, I have it kind of drawn out. To me, it looks like it's going to come into these fair value gaps down here and try and fill them out and potentially make a higher low. And the reason why I'm set on this being a potential higher low area is because, to me, the Dow has shown potentially a change of character already. Okay, so what have we seen since the high here? Lower high, lower high, lower high, lower high, and then we also saw lower low, lower low, lower low, lower low, and then finally, after this lower low, we get a higher low. Okay, I should say a higher high from this lower high. Okay, so lower high, lower low, higher high. Okay, so potentially, hey, something may have changed here. Then we break down, we actually break this low. Okay, but in my opinion, we took the liquidity that was pulling under here, because what was this level? This was the previous 2022 low of the year. It was the low of this year. We took it out, took the liquidity that pulled under there, and have risen since. And now we're potentially going to come down, and we could potentially make a higher low from here. And if we do, and we start breaking this trend line on that rise, then I think we're in for a big move going into December. Okay, so we just have to be patient. We have to watch how the Dow performs. If the Dow were to take out this level I have circled here, it's going to be very hard for it to hold this level and not come down towards these wicks to take them out. It's still possible, and if it does hold these levels, that still qualifies as a higher low. The probabilities will be far lower than if it just took out these fair value gaps and held here. Okay, so ideally you want to see it hold this zone generally. All right, next is S&P. So S&P, breaking down, and as we can see, actually filled out this fair value gap here. So let's take that off the chart. We don't really need that there anymore. So that fair value gap is gone, and to me, it's slowly making its way down to 3,600. And the S&P, S&P 3,600 is a major level for it. There's a ton of bullish activity there. A lot of orders will be there. If it's going to make a higher low, I would bet that would be the general zone. So anywhere from 3,600 to 3,588, this general area here, where you have this pivot here where the liquidity is, and then you have this horizontal support level. I think this general zone, if there's going to be higher lows building out in all the markets, this is where it would be for the S&P, in my opinion. If it were to break this level at 35.88 at the lowest, I actually do think this low wick will get taken out. It'll be very, very hard for it to hold this low wick. Doesn't mean it's the end of the world. It just means it may be just coming back down towards this level right here, which is 3394.4, which happens to be the high prior to the COVID lockdown drop. Okay, so that we're due for that. S&P will eventually get there at some point. It could be now, or it could be sometime next year. At some point, it will get there and break under. All right, so next is NASDAQ. So NASDAQ breaking lower, and as you can see, percentage-wise, like always, the NASDAQ tends to have more extended moves. because it's far more volatile compared to the Dow and the S&P. And if the S&P and Dow are going to make higher lows, you can almost expect that the NASDAQ, it will make a higher low, but it can actually make a double bottom structure as well, because of the nature of it, how much it moves compared to them. And that's what we're looking at here. It's coming back down, likely going to come down towards this median line of the descending channel it's been in for so long, and that has the confluence with the low wick right here. So we'll see if it can actually hold this zone and potentially make a double bottom sort of structure. Again, that's only if we're actually going to get a higher low for both the Dow and the S&P. If they're going to break their lows as well, then the NASDAQ won't just break its low, it will be far lower than its low, and it would actually probably reach its 2020 high, or I should say the COVID lockdown high. So prior to the lockdown drop, this was the high. So that's about 2020, yeah. So we could be on path for that as well. All right, and now let's go on to oil. We'll do oil next. So oil came, tapped this fair value gap. If you remember, I had this fair value gap here, tapped it, and so far it's falling off of it. Potentially, with this structure now, so as this structure has matured, I'm getting more bearish vibes from it in the short term, so we may see this break down. I was fairly indecisive in that, hey, we could be coming higher to test this trend line, or we're breaking lower. I personally think that we are going to come up higher, but we may have to break lower to this zone here at 84.48, and potentially a little lower going towards 82-ish to 83-ish before breaking higher, because I do believe as we get towards the colder months, oil is going to go up, in my opinion, because the demand for it will increase dramatically, especially in the US and Europe, and there's going to be probably supply shocks everywhere. Okay, that's just what I'm thinking. But eventually, I do think as the markets open up again, over the coming years, you probably will see oil break down towards the 75s, potentially 60. But looking at the much larger macro time frame, this structure that it's in, which is like a monthly structure, so you have this top descending trend line, this lower descending trend line, is bullish. Okay, it is bullish, and over the months to years, as we look throughout this decade, I believe oil will only go higher. Okay, next is gold. Let's take a quick look at gold and silver. So gold coming down towards these low wicks, so far wicked off of it, in my opinion, will likely break down. Okay, will likely break down. It's very rare when you have this sort of structure, like a double wick structure, hold as support. It happens, but the probabilities are super low. Doesn't really happen often. But once we take out those lows, I do think we'll be primed to eventually try and test the descending trend line once more. And I do think the next major test of this trend line will break it bullish. Okay, we are on the verge of it. We are on the verge of it, in my opinion. Silver. Okay, so silver is in that expanding microphone structure. Okay, so it's still battling here, fighting off this fair value gap. Eventually, in my opinion, it's probably going to break down towards this trend line here, unless tomorrow is very bullish and we actually close within this fair value gap. If we don't, I will be looking over the next week or so for it to come back down towards 18 and change, and then eventually finding the strength to hold on and break up higher again. Okay, it can break lower. And the probabilities are a bit more to the downside, but I am watching the dollar potentially weaken out, so I have to also attribute that to what I'm seeing. Even though the structure is, the probabilities are for it to break down. If the dollar gets weaker as it starts hitting the top side of its bull structure, I have to assume silver will show some strength, especially if it comes down towards this level. All right, and last but not least, Bitcoin. So let's pull up the Bitcoin chart. So looking at Bitcoin, so Bitcoin falling off this fair value gap, especially after FOMC, and it's been tapping the top side pretty much of this bullish fair value gap here. And so far it looks like it's potentially going into a bullish consolidation. If we can get another rise, sort of like kind of like how I have here, so pretty much we rise up slowly around here, break down again, make it a little bit of a low, slowly rise again, break down again. What does that start looking at? It starts looking like a bullish flaggish pattern. That's what we want to ideally see in a slow crawl sort of way, unless we're going to get enough liquidity from this zone and then actually just pull up. But if we don't do that and we start consolidating out, this would be the ideal sort of structure, give or take. Okay, I am still bullish on Bitcoin. I see that we are likely going to break out to the upside, but it's going to take some time, at least potentially. Probabilities are probabilities, are not guarantees. We took out these highs, this high here. Okay, we broke through this descending trend line, and now we're potentially going to consolidate there to try and get the fuel to break through this fair value gap and start attacking the high of this pivot here. So, Bitcoin just needs more time as this larger bottoming structure that's potentially formed here plays out. All right, we just have to be patient. And if it does fully play out, then this imbalance I have circled here is the ultimate target to take out and really start looking at this consolidation here. All right, that's it, everyone. I hope you're having a great day. Remember, just like I said in the beginning of my of this video, if you're interested in any of the services, make sure to check out those links. They're going to answer most of your questions. And if you have questions that aren't answered there or anywhere in the Discord, just let me know in the Discord, and I'll try and answer it the best I can. All right, everyone. Remember, be patient, be vigilant, and be nimble. Love you guys. Take care. Bye.